Welcome to the Capital Spreads Weekly Update. Today is Thursday, the 27th of July 2011. And looking at the current situation, well, three key themes seem to be driving the markets at the moment. The first seems to be continuing impasse and uncertainty over the raising of the US debt ceiling. The second is the US corporate earnings season. And the third is a continuing lingering doubts of the Eurozone debt crisis. So looking at each of these individually, many people are touting the 2nd of August as the deadline beyond which the US will default on its debt. Now that seems to be an unheard of scenario before, and we would very much be in uncharted territory. Many people are predicting that if the US was to default, we could be in a crisis which would be on par with that which we had in 2008. In stark contrast to the negative global economic environment, many US companies have been announcing exceptional results and record quarters, for example from the likes of Apple, Microsoft, Intel as well as Amazon. However, this has led to many people shouting that there seems to remain a jobless recovery in place, and the profits that these companies announce are off the back of restructuring and cost cutting rather than growth. Finally, despite the fact that the Greek situation seems to have temporarily been resolved, many people believe that it's very much a short-term solution and Greece will still default. Not only that, they believe a number of the other peripheral Eurozone countries, the likes of Portugal, Ireland and Spain, face similar situations and problems, and the Eurozone debt situation is far from being resolved. So looking at the FTSE as it currently stands, it's trading around 58.10, it's down about 40 points on the day. However, despite the sell-off in line with the rest of the global economy, it still seems to be in a long-term trend, and I have a chart to show you regarding what I mean. As can be seen, the FTSE started an uptrend back in July 2010, and it has tested the trend line several times since, bouncing off it each time. We are coming back close to that trend line again, and this could very well be another buying opportunity. However, it has to be kept in mind that there are key fundamental data out there that could certainly affect the equity markets going forward, and it might very well worth be waiting to see what actually happens before committing yourself. In the short term, you're looking at support around 57.20 in the FTSE and then down at 56.50. Whereas on the upside you're looking at resistance around 58.90 and then the pivotal 6,000 level, a level beyond which the FTSE seems to find it difficult to break away from either way. The euro dollar has also become very topical recently, as people have been shifting their riskier assets out of the US dollar denominated assets and into the euro. However, even recently people have been moving out the euro when they've realised that the euro has its own problems, and buying what could be classed as more peripheral currencies for example the likes of Aussie dollar, US dollar, dollar Swiss franc and even sterling dollar, US dollar. As a result, those currencies have been rallying, and both the US dollar and euro have been getting sold off. Gold has also been rallying over the last few days or so, and recently hit an all-time high of around 1627. Now there's two fundamental reasons for this. The first is the continuing uncertainty in the global economy, and many people are using gold as a safe haven. And the second is the fact that inflation remains stubbornly high, and many people are using inflation as gold as an inflation hedge against gold as an inflation hedge. Oil, on the other hand, is trading around $97 or so. It seems to be stuck between 105 and a 95 range. Now, oil seems to be reflecting the uncertainty that we're having in the global economy, and therefore the demand that we can expect from oil off the back of this. In terms of the week going forward, there's many key figures over the next week that could certainly move the markets. Some of the highlights include, for example, US GDP, which is coming out tomorrow. We've also got US inflation coming out on Tuesday, as well as Bank of England ECB rate decisions on Thursday, and non-farm payroll figures on next Friday. And let's not forget the 2nd of August being the deadline for the US debt ceiling situation to at least have some resolution. In terms of client activity, many of our clients have faded the moves we've had over the last few days, believing they have been overdone and due for a correction. So they've bought into the index markets, the equity markets, and they've also bought into the fall that we've had in dollar-yen over the last few days or so. They also continue to hold long positions in gold as well as oil, believing that they could certainly go higher from here. In terms of the theme of the week, I've said the theme of the week would very much be the US debt situation and the uncertainty and the impasse that it has created. It seems to be dominating pretty much everything at the moment. Until that gets resolved, I don't believe people will be focusing on anything else. That's it for now. As usual, if you have any feedback, it's media@capitalspreads.com.